Of the Invest Talk market analysis. We're going live here on YouTube, and feel free to ask any questions that you might have. I'm gonna pull up the chat just in case anybody wants to chime in here. And this is going to be a market overview per usual. I'll go over kind of what's happening in the market as a whole. And really, this is all about a new year. Happy New Year to everyone out there. New year, new market. And there's some new trends. New year, new market, new trends. That's what really this video will be about. So we'll talk about those trends. Feel free to ask any questions that come about. So let me share my screen here. Share my screen. Here we go. There we go. Actually, I'm going to share my entire screen so we have that. All right, here we go. All right, so let me dig into the heat map for the week. I love this. This is always a good overview. Kind of see what moved well this week, what didn't, and what you see is a lot of red. We had the market closed obviously on Thursday, a short market on Wednesday, so it was kind of a short trading week. But overall, you saw a lot of red, especially in tech. Look at Palantir down 14% on the week. AppLovin down 15%. Microsoft, Meta, Tesla down nearly 10% on really, really bad delivery numbers that missed expectations dramatically, and those expectations were poor to start with. So the Tesla car business is just struggling in a gigantic way right now. Apple down over 1%, but for a week, that's not that big of a move. What you can see is there's actually some strength. You saw that in product manufacturing, producer manufacturing. So really anything around chips. You see Micron up 8% on the week, Intel up 8, almost 9% on the week. So a lot around chips, and I think infrastructure for AI remains strong. But what this is saying, the market is starting to say, is this is not going to be a profitable endeavor for these big Mag 7 names. That means that if the market starts to re-rate these names lower, that's going to drag the overall market lower because of the tech side being such a heavy weight in the indices, which we've been talking about for a while. So it's not surprising to see this. That we've been saying this, and you saw some general weakness in tech really from late October, call it November and December on, and it's continuing now into January as well. The finance space, you see that that was red as well. So definitely some of those names are weakening. A lot of those names are financing not only the big tech names, but private equity as well as the consumer, which consumer is starting to weaken as well. You saw Amazon down over 2% on the week, Mastercard down over 2%. So a lot of red here. So really, energy did well. Now we'll see what happens over on Monday, because we just had overnight President of Venezuela, Nicolas Maduro, being captured by the United States, and it looks like we're going to go in there and start running Venezuela. And could that unlock some oil reserves, oil supply, and push oil prices down? I think that will be interesting to see how the market reacts to that once again on Monday. But overall, strong for the week. Oil was, anything industrial was pretty strong. You see that here, process and industrial services. Health services did fairly well, although health tech kind of struggled. You had names like Intuitive Surgical down 3%, Gilead down 3%, and just mainly red on that side. So that was the market this week, and we'll get into the charts here in a little bit. Now, on the economic front, not a whole lot of economic news. You have some jobs numbers that I think still you can't really trust exactly what those are looking like because of the government shutdown. We'll see how they trend. I think starting later in the first quarter, we'll start to look at those. Pending home sales, though, this came in up 2.59% year over year. Now, this is November, so it's a little bit lagging, but you can see is a lot of this is off of a low base. So if I go to pending home sales index, yeah, let's go with this one. I think that's the one. So what you can see is this is coming off of a low base. So it is accelerating to the upside. So rates have come down a little bit. and prices are starting to come down. And so that's spurring a little bit of economic activity on that front. So overall, that's a positive. Also, this is what I talk about is so important: bank credit. And what you saw this week, where you actually saw the long end of the curve going higher, meaning 10-year, 30-year, those rates were higher, whereas the short end was relatively flat. What that did was steepen the yield curve. Now, what that does is it overall makes lending a more profitable endeavor. And so banks tend to lend in that environment. That's why I say you're likely going to see a reacceleration in the economy in the beginning of the year, first half of the year. Now, however, that usually is the end of the cycle at some point, whenever that kind of resurgence in bank lending uh, manifests, and then you get the opposite happening. You get the yield curve flattening, where okay, that creates maybe inflation. The Fed goes from an easing cycle, which we're at now, into a hiking cycle, and then inverts the curve, and then that's the end of the cycle. So, but that does not mean that has to happen short term. Doesn't have to happen this year. It could be 2027 or even 2028. So understand those dynamics and that liquidity dynamic that is playing out here in the short term. You're also seeing the reserves starting to rise as well. So this is the Fed going in and now doing its own. It's QE, right? They're buying short-term treasuries, short-term paper, T-bills, and that is helping reserves in the banking system. So that is also a positive for liquidity. The Federal Reserve, the Treasury General kind of talked about this. Their target by year end was 850 billion, and they ended at 837. So they actually missed their target a little bit. But now they're free to maybe drain this, and that could also be another lever that this administration has to juice the economy, juice capital markets, etc. And I could see that happening sometime this year, especially if you get into rocky territory, you get a sell-off in those Mag 7 names, which we'll go over here in a little bit. But that's certainly going to be an important aspect to watch to see where that goes. Bitcoin, another, I would say, canary in the coal mine. This is still in a downtrend. It is starting to recover, okay? And but it needs to get above this 90, I would say this pivot right here around 94 and change, called 95,000. That's when it starts getting interesting. At 100, that's where it really gets interesting. And that's this breakdown level right here, about 101. If it break above that, then okay, now this breakdown has reversed and can resume back to the upside. Because if you zoom out, it is still in an uptrend on the longer term chart. It's just the shorter term chart that isn't looking so hot. So we'll see. Obviously, if tech rolls over, that's going to make it difficult for Bitcoin because there's a lot of correlation there between the Nasdaq, and I'll show you a chart here in a second on that. So no real big news on that front. We're still hanging around that 90,000 mark. The Fed funds rate, we talked about this. This is a bit overrated in the grand scheme of things right now, but I do think it does have some importance on where the market expectations are moving. And that is right now about 1.5 cuts between now and the end of the Jerome Powell uh, being the head of the Federal Reserve. Now, he'll probably stay on the board, and there'll be a new chairman of the Federal Reserve. So what would that look like? By the end of the year, the market is expecting really only 2 to 3 cuts, somewhere in that range between now and year end. Obviously, President Trump wants something more aggressive. He probably wants all the way down here, 200 basis points. If that happens, that's certainly going to weaken the dollar. And I think the big question is what happens if the dollar does weaken and we get some liquidity into the system. That'll be very interesting to watch. But right now, that's what is expected, and we'll continue to keep an eye on that. Now let's bring over the charts here, drag that down here, and then let me bring up, where am I? My charts. Here we go. Okay. So I want to start with the NASDAQ because this is so important. I'll go to a daily. We'll zoom in here. Okay. Get it kind of center of the screen. What you can notice here is this is now making a series of lower highs and lower highs, but not lower lows. Okay. One lower low, but now we have a higher low, what could be another higher low. So it's kind of a wedge pattern. Okay. So what you could easily see here is this. And we're getting to that point here where this is going to have to resolve one way or the other. My guess is it's to the downside. Look at the MACD, how weak this is, and that kind of rolling over. So I definitely don't like that. Let's bring up the Qs so you can see that MACD a little bit better. Same type of thing on the Qs, right? That MACD definitely weak. And if I zoom out to a weekly chart, definitely a micro bearish pattern with this move right here from the week of or November, first week of November. And it hasn't gotten above that red bar. So when you get that big wide ranging reversal and you get choppy consolidation, that is usually getting ready to make another move lower. Okay. Now let's look at the SPY. A similar type of move, but certainly a bit stronger, closed above that high. So what you can see is that this is not nearly as weak as the tech sector as a whole. And this is making incremental high recently, but it's kind of a weak high. Not something that I really trust as some big breakout. In fact, look at the MACD continue to trend down as well. I still think we get some sort of market correction in the first half of the year, probably the first quarter is my best guess. And we get some sort of panic. Maybe that's around Venezuela. Maybe that's something that goes on in the Middle East or in Ukraine. It also could be the Mag 7 just falling out of bed. Here's the Mags, right? And this is even weaker than the broader Qs. Okay, look at this. This is have similar pattern here, rolling over, and it tried to make a new high, failed this last week, and is retesting that 100-day moving average, which is already tested in earnest basically back in November, and it's no longer going to have the same staying power as it had before. So most likely, if you break that 100-day, you're probably headed down to the 200-day moving average. This 382 retrace and this breakout area from December of 2024 would not shock me to see if that's where it goes. Now, let's take a look at the individual members of the Mag 7, and we'll start with Tesla because Tesla definitely tried a breakout and failed. When you try to a breakout and you fail, that is a bearish sign, and obviously the news around deliveries was very, very poor. So not a shock to see that as well. Let's go look at Meta. But another one of the mags, one of the hyperscalers, this is in a clear downtrend, right? Got a bounce just to was that the 50-day moving average, I believe? Yep. Oh, no, sorry, to the 200-day moving average, excuse me, that's the purple line. And that is failing to get back above that as well. So would not shock me to see that rolling over also. Google has been the strongest, and call it Alphabet. And what's interesting here is that tried to break out and came back in. Okay, try to break out on Friday, came back in, still doing okay, but look at the MACD here. It's a pretty big move on the MACD. Would not shock me to see this start to roll over as well. Let's look at Netflix. Netflix around the acquisition of Time Warner. This was starting to find some support at its gap fill, kind of this area where there's previous support, and it looks like it's starting to fail as well. So I think this is headed down to probably this low here, right around 82, and could be headed even lower. Let's take a look at Microsoft. Microsoft, certainly another one of those names that has been weak. Tried to break out again here, failed, been consolidating right at that 200-day moving average. It's been hitting that 200-day moving average consistently. And as I said, you hit moving average multiple times, that certainly will likely break. So would not shock me to see some more follow through to the downside there. And then Amazon. Amazon also had another rough day, tried to break out here, failed, still is, making lower highs with higher lows, so kind of a wedge pattern as well, but this certainly could break down and the MACD is now below zero. So what you can see is a lot of the Mag 7 names are not looking that hot on a short-term basis. Even Apple, which had been in a strong uptrend, is starting to kind of grind lower, and that MACD is now approaching that zero line, which is certainly a bearish sign. So that's pretty much am I missing any Mag 7 names? I don't think so. I don't think so. So, it'll be very interesting to see how this evolves in the new year. But what's interesting is that if you look at some of the other sectors, and let's dig into that right now, you can see, look at XLI, right? Look at that strength on Friday. This is looking to break out. Okay, look at utilities, which is kind of now de facto a bit of the AI trade. That certainly is getting a bit of strength, even though longer term rates are starting to rise. And this could be another factor. It's not just the fact that massive AI capex spending, is unlikely to be nearly profitable or nearly as profitable as their current business, but also remember these are long duration assets, and if long duration sells off, here's IEF, right? These are the 10-year treasury, the TLT, also relatively weak. You're starting to see that long end blow out. So I think the market is starting to worry a bit about the inflation risk, okay? The inflation risk that's happening in markets. Here's INFL. So this is anything inflation related that still remains relatively strong. The growth to value trade, that's starting to roll over as well. So you can see that was in a strong uptrend and now is starting to really fail in a material way. And remember, that's the broader indices are certainly uh, weighted towards the growth side of the market. You look at here's metals and mining, that continues to be strong. You have silver, here's silver miners. Silver and gold had a rough week, but they were just very, very overbought here. So not a shock to see this kind of come back in. Really no problem on the longer term. Right, here's GLD. That also had a rough week, but once again, that was just overbought. So would not shock me to see more consolidation at these levels. I believe the CME raised their margin requirements on silver, and so that kind of de facto hit gold and silver. So I still think you buy these dips, but there could be a bit more downside, I think, in the near term. Let's see, what else do I want to get to? Oh, so this is also interesting. Is not only the Mag 7 names, but look at this. These are the software, tech software, cloud computing. Here's IGV, right? Tech software sector. Here's SKYY, cloud computing. All of these are rolling over in a material way. Here's cloud, CLOH. These are all very, very weak. And you can see that the market is starting to worry that AI, while it's great for a lot of things, it's going to be very detrimental to many of the software names where, we've done this internally. We've actually built pieces of software that can usurp some of the stuff we're already paying for. And we're doing that with just the Claude subscription, writing code, subscribing to just the raw data from places like FactSet and elsewhere, and we're able to put together a piece of a research tool that we were paying hundreds of dollars a month for, and now we no longer need it. So that's just us, a smaller business, and what's happening on the larger scale and how many of these enterprise businesses can really build out something using AI, using Claude that can replace things like Monday.com or maybe even Salesforce or things like that. And that's really what's happening here with these names. Here's Monday, right? Monday is very weak. Let's look at CRM. This is Salesforce. That's also very weak. So once again, there's a lot of these names that are certainly struggling in a big, big way, and that could be what's bringing down the markets. Because remember, those are the best businesses in the market right now. Those are the ones that have high profit margins, high return on equity, low debt, all of this. And they've been trading at very, very strong premiums for a long period of time, especially because of that growth that they maintained. And if that growth is no longer going to be what drives the market forward, drives these names forward, what happens? What's carrying the market anymore, right? Because most of these names are trading at pretty high multiples. You look at I'll give you another name, HubSpot. We use HubSpot, but it's in a downtrend. It's still trading at 45 times earnings, and that's because growth was just consistently in the 20% range. And will that decelerate in the new year? I think is a big, big question. So that's kind of what's happening here for these tech names, and I think that's what's really likely to bring the market down is the big tech names being related, big and medium and small, being re-rated lower in a material way. So would not shock me to see that continue into the new year. Let's see, what else do I want to get to? I think there are other names. Yeah, let's go to some ratios. I love to check these out. Small caps to large caps. What you can see here is this is rallying. So small caps are starting to outperform. So from a portfolio composition standpoint, what do you trim? Do you trim the large caps, small caps, mid caps? Well, probably more the large caps than the small and mids. Here's EFA to the IWV. So this is foreign stocks to the domestic stocks. When you see, look at this volume as well. Foreign stocks got a big move on Friday, and this looks to be breaking out from this range here, from that breakout consolidation period. And if it does, it could mean the whole market comes down, including foreign names, but those foreign names are likely to continue to outperform in that new year. So I certainly like that. What else? Anything else? Yeah, I mean, the credit markets, this is the positive. This is SHYG to SHY. So this is short-term junk to short-term treasuries. And this is fine, right? Even though the market is starting to get some weakness, this is just hanging in there. Now, could it break down? Sure. And that would probably be needed for a much larger pullback in markets. Excuse me. Remember, a lot of what is likely to happen here in the near term for markets is that those tech names, they're not in risk of bankruptcy for the most part because most of them have very strong balance sheets. But does AI zap their growth? Does AI zap their overall profitability of their business? And is that the change that really? Yeah, sorry about that. Just changing my layout here so you can see me. You haven't seen me this whole time. I'm sorry about that. Um, so is that the change that is happening in markets? It's not a credit market disruption because most of the bad lending happened in private equity. In fact, let's bring that up because that's going to be the most important. Here's PSP, right? So this is actually getting a little bit of strength in the near term. Now, is that because the Fed is going to be more dovish? What is it? Is because industrials are going to be stronger? Who knows? But this is at least giving some near-term strength, but tells you that once again, this if there is a pullback in markets, it's a re-rating lower in it's multiple due to growth, due to the strength of its business, et cetera. And once again, because the broader market is so heavily weighted to those names, that could be a major problem. Let me pull that up here. I'll show you IWV and what are the names that are really keeping this market up and how many of them are overvalued. So obviously NVIDIA, actually that's one of the Mag 7s I did not look at. Pull that up. So what's interesting is NVIDIA was up on Friday, but it kind of closed at the lows of the day. So even though tech in general, and you look at the SMH, that was strong, NVIDIA was not one of those. Okay. Uh, Microsoft, the question is, I know this is something we've been batting around. Google is winning the AI race right now. It's crushing OpenAI. I know a lot of people use ChatGPT. We still have used ChatGPT internally for some things, but more and more I'm using Gemini, and the ecosystem of Google makes more sense if you're using Gemini consistently. Remember, Microsoft's kind of tied to OpenAI, and OpenAI just doesn't have the money to build out what is necessary to compete with Google to have their own internal chips, TPUs, as well as just more data from years of running Google and Gmail and search and all of this that they can plug into their AI models. And so, Microsoft, the third largest company, I think has material risk. To be honest with you, Amazon, same thing. Right, their hyperscaler is AI going to make it easier to now shop not through Amazon, right? You could there'll be agents that say, "Hey, I want if you want to buy something, find me the best price on this product that it should ship here for free or within a certain time frame." And then instead of Amazon, you're going anywhere because most people don't really care where they get their products from as long as it's the cheapest and the fastest. And so, does that hurt their business overall? I think that's a huge question. Then Alphabet's there, obviously Broadcom. This is any of the chip names while they are strong, are susceptible to changes in technology, as well as maybe these hyperscalers pulling back in some way to their capex spending. And then Berkshire. Berkshire's another one where, it's not in the tech space, but guess what? This is no longer a company that is run by Warren Buffett. He stepped down as the end of the year. And what you can see is ever since that announcement, this has been in a downtrend and kind of underperforming the broader market. So, there's a lot of issues with these top 10 names that are really holding up this market. If they start to re-rate lower, that can be a big, big issue. So keep an eye on that. Oh, Palantir is the 20th largest company now. That's so crazy. Look at Palantir, and this is probably one of the most overvalued companies in the world. So this is starting to roll over as well. So really, really interesting market dynamics that are emerging here in the new year. I hope this gave you some perspective on, where we are likely for 2026 is going to be a different year than last year. I almost guarantee it. Never are you seeing the exact same type of dynamics playing out across the market from year to year. They change, they shift. Now people can take profits. A lot of people didn't want to take profits before year end, triggering capital gains. Now that changes here in the new year. And so seeing a sell-off in these Mag 7 names is not surprising me, and this is a market rotation that is happening in earnest. So appreciate you all tuning in and liking and subscribing to this channel. And a reminder, the contents of this video are for educational purposes only. It should not be considered a recommendation to buy or sell security or to participate in investment strategy. The views are my own and do not represent those of KPP Financial or those associated. Have a wonderful weekend.